for accountants and auditors. Recognize the distinction between physical security, digital security, and multi-signature wallets. Identify the ways two-factor authentication and password managers are used in crypto. Highlight the importance of market caps, exchanges, price indexes, and block explorers. Finally, all the benefits and challenges associated with tokens, how they are offered, and the roles of the SEC. So, before we start, you all are all in the banking industry, or what industries are you all in? It would be nice for me to know so I can tailor the presentation. Banking.
I mean, internal.
Sorry?
Internal.
Internal? Finance. IT. Finance. Perfect. So, securing digital assets. Key terms and definitions of crypto and digital assets. So we'll start off here, jog our memories a little bit. How is your understanding on crypto? Have you all had any exposure to it, or quite new to it? Okay, quite new. Okay, so let's take it step by step. Okay, so cryptocurrency, simply put, is digital or virtual currency that uses encryption algorithms to secure it and create additional units of it. Okay, that's the basic. That's all I want to remember for right now. Okay. Digital assets, on the other hand, are a broader range of virtual currencies. So, for example, if you wanted to put your assets that you have in real life on the blockchain, that would be a digital asset, right? So, for example, let's say you have your houses, cars, land, all that, right? You could tokenize it, digitize it, and put it on the blockchain. That's one way of converting your assets onto the digital plane. We'll go in detail later on. And blockchain is a decentralized distributed ledger that records transactions across multiple computers. So let's break this down, right? Decentralized means no one person is in control of the system, right? Think of it as a multitude of computers running something called a consensus algorithm, right? So it will work together to decide whether to verify something, to approve something, stuff like that. So there is no central authority that controls the entire system. Next, okay, we went through decentralized, public and private keys. So the best way to explain this is with a real life example, right? Think of your bank accounts. So you have your bank account password and your bank account number, right? So when you want money to come into your account, you would give people your bank account number. So that is the public key in crypto. When you give people your public key in order for them to send funds. Your private key is your bank account password. Only you should know that and keep it safe. That's what you use in crypto to access your funds and authorize funds. Okay? Wallets are pieces of hardware or software that will store your private keys and your public keys. Okay. Next up, we will go through attributes of crypto asset wallets and security importance for accountants and auditors. So first of all, we'll go through 4 different types of wallets that exist right now that you can use. Okay. First off is a hardware wallet. So it's a piece of hardware that will store your public key and your private key. Just to recap, public key is like your bank account number and your private key is your password. So this piece of hardware will store it. So since it's a piece of hardware, it's not susceptible to online attacks or software related attacks. However, note that some hardware wallets do come with Bluetooth capabilities. So I wouldn't advise you to go for one that has Bluetooth capabilities, because there have been people have hacked via the Bluetooth network multitude of things. So you don't want to add that additional risk. So if you're selecting a hardware wallet, make sure it doesn't have any wireless interfaces going in and out, right? Even though it might be easy for you to keep the Bluetooth on and check it on your phone, you don't want to add that additional risk. Next is software wallets. These go on your phone, desktop, extensions on Google Chrome, stuff like that. So these will do the same thing, stores your hardware, stores your private and public keys in that wallet. Except if there are any online attacks, software attacks, it could get get compromised. When we go through two-factor authentication, I will show you exactly how one would approach in breaking these authentications. Okay. Next, we have exchanges. So exchanges, you could store your crypto, but you don't own your crypto, right? Very big difference. You can move your crypto on the exchange, you can buy your assets, sell your assets, all that, but you don't own it, right? If the crypto exchange decides one day to say, you know what, we're just going to go disappear, they can take all your funds and you can't do anything about it. So when you're using exchanges, you only keep money to buy the asset and then take it out of them, right? Don't keep any money on exchanges that you're not willing to lose. It's a very important thing. Next, we have multi-signature wallets. This is, we'll start off with an real world example and then convert that into the world of crypto, right? Think of all of us having a joint bank account, okay? Except when, if I want to send money, I'm going to need my password, and at least if let's say the three of us are having a joint bank account, my password and one of your passwords need to be used to authenticate that. So in crypto, the multi-signature wallet will have, let's say, X number of users and Y number of authentications. So one person cannot transfer like just by themselves. They need the other 2 or 3 people to verify that transaction in order for it to go through. We'll go through the benefits of this later on. So before we go on to this, how is your understanding so far on crypto? Anything that didn't seem out of place, anything like that? Any questions? So far so good? Okay. So we'll go through these 4 points and then we'll elaborate on it further. Okay. First off, confidentiality of financial data, fraud prevention and detection, immutable audit trail, and the protection of client assets. So for the confidentiality of financial data, there is something called a private blockchain. So you have your public blockchains like Bitcoin, Ethereum, then you have private blockchains. So think of it as wide area networks and local area networks. Okay, so you have the whole internet, which is public blockchain, and then for example what we would have the network inside here, right? That is a private blockchain. So one way of securing it is now the outside doesn't have access to see what's going on the blockchain within the internal network, right? We will see how that's important when we use block explorers. So the other thing is through encryption. So for example, in your industry or in your company, the accountant section, or there's maybe some kind of data that you only want certain people to see, right? Let's say a financial statement analysis, you only want certain people to see it. So what you can do is you can encrypt it and put it on the blockchain. The encryption key can be given to people who are authorized to see it, right? So that's 2 steps of confidentiality. So accountants and auditors can securely share their financial data within the blockchain network, limiting access to authorized parties and reducing the risk of data breaches. Fraud prevention and detection. So in the blockchain, data is stored in blocks, okay? And each block cannot, once it's pushed in, it cannot be edited, right? Also remember that in the blockchain, it's decentralized, right? So that data is not manipulated by a single authority. So you know that data is valid, okay? So all that data is stored in the blockchain, right? By recording all the transactions on the blockchain, accountants and auditors detect irregularities and discrepancies in financial data more effectively. So how this happens is, you have all your data, right? You can see what type of data, what kind of data looks like valid transactions, correct? So once you have that, you can use smart contracts. So smart contracts on the blockchain are like pieces of code. Consider them like functions that would get activated if there is an error in the data, right? So those smart contracts can be used to alert network manager or people in charge that something is a little fishy, doesn't look right. So that is for fraud prevention and detection. Immutable audit trail, right? So same for private blockchains as public blockchains. Like I said, when the data is added, you can't go and edit that data. It's not possible, right? So first of all, the data is structured in an amazing way, right? You know every part of that data in the block. Two, it can't be changed. So stakeholders are more confident on what's going on within the company if stuff is put on the blockchain, right? So the ability to track and verify changes to financial data enhances audit transparency, accountability, and promoting trust among stakeholders. Protection of client assets. So just like how we used our private keys to access our funds, public keys to send funds out, you use the same thing for data as well, right? So assets, remember how I talked about the tokenization of house deeds or whatever I'm putting on the blockchain, stuff like that, you can do it here, okay? So accountants and auditors can securely store their client assets on the blockchain, ensuring their integrity and protecting them from fraudulent activities, okay? So the tools that are used to accomplish this mission are Quorum, Coda, Hyperledger Fabric, IBM Blockchain, and the Ethereum private network. So when you're starting out, you would build this private blockchain using one of these softwares. You can of course do it from scratch, but it'll take a little bit of time. You have to design everything from scratch, including the consensus algorithm. Right? So let's see a use case for a crypto asset management firm. Okay? So we'll go through these steps and then we'll try and have an interactive session to see how we can actually do this, right? So we develop a private blockchain infrastructure that ensures secure and transparent transactions. So your secure and transparent transactions come from the blockchain technology, right? Which you guys understood so far? Okay. So you can implement the smart contracts to automate processes such as fund transfers and asset management. You provide customers with a user-friendly interface. I cannot express how important the UI is, right? If the UI is not easy for the customer to go through it, it doesn't matter how amazing the backend technology is, it really doesn't matter. The user is going to just be frustrated, okay? Because tech guys and financial guys, right? We understand what goes on inside. We love that process. Outside clients, they're not going to understand exactly what goes in or value what's going on inside. If it's going to take more than 3 seconds for them to do something, they're going to get bored and they'll switch to something that already exists, right? So you provide customers with a friendly UI that allows them to have full access and control over their funds, private keys, public keys, right? And then you generate profits, this you all know, right? By offering fee structures, management fees, performance-based fees, while ensuring transparency and delivering value-added services, right? So let's see in real life, right? Here, how we could do this, okay? So anybody has any ideas on how we could do this with the places that you all may be working in? Any ideas are welcome. It doesn't matter if it seems outrageously impossible, it's okay. We're here to learn, brainstorm. So if anybody has any ideas on how we could do this, right here, right now, in real life, in Sri Lanka, now is your time. Any ideas? Okay, not bad. Expected at least one, but we'll try and brainstorm it. Okay, we'll try and brainstorm it. So let's say for government securities. Okay, go with government securities. We'll start with that example. So we have what? Treasury bills, treasury bonds. Go with those two. When we purchase them, right, we need an intermediary. Correct? Most times, most often than not, we need an intermediary. Go to the intermediary. We go fill a bunch of forms. Then we transfer, form maybe 3-4 times, then see if it's all right, correct? Everyone knows the process. So let's say we tokenized these assets. Now, for example, you've got to know that the government has to be on board with this. You could use the same thing if you're a private company as well for your assets. Okay? So you tokenize the assets. Okay? So the token represents the physical property of that. Put it on the blockchain. You use smart contracts to automate all the intermediary processes, right? Tech people all know how this happens, right? If it's repetitive, you can automate it. You automate it, put into smart contracts. How much time and efficiency do you you gain off that. Okay, so we do that. So what the client would do would have an app. They would see the amount they want, the tenure they want. All what they need to do is see the amount they want, and send the money. On the back end, on the blockchain, number one, they are guaranteed to sure that all these assets are theirs because they access it, right? They have the private keys for this, and that's a huge plus point in terms of explaining the value of it. They don't really care if it's written on the app. None of us would really go through that. We like to just invest it, get the money, right? That's how it is. So if you use it, you make it very easy for the user and for your company as well. Okay. So where were we? The user sends the money. Smart contracts automate the processes, but it has to be done on the government side as well. And then the smart contracts automate everything. Client gets a confirmation. Okay, you remove a lot of intermediaries. So like that, with asset management, it is possible. Okay, it's not impossible. So when you all do go back to your companies, think about it. Okay, think about how you could implement this, right? But if by implementing it on the blockchain, if it is not going to be efficient for the user, then what already exists, it's not going to work. No matter how good the technology is, the adoption for crypto-related products and blockchain-related products here in Sri Lanka is limited because people don't understand it. Yeah. So when you all do get the chance, check the viability of it based on what you all do. But understand that whatever exists in our physical plane, you can tokenize it, digitize it, and put it on a piece of tech that is immutable and transparent. Okay. So the next one is the distinction between physical security, digital security, and benefits of multi-signature wallets.
Excuse me.
Yeah.
Questions. Can you have a private blockchain within a private blockchain?
Yes, I believe it is possible. So you mean encrypting? So it's like the encryption of data within the blockchain, right?
Yes. So say you're in a conglomerate and you have different subsidiaries and you want to put your assets into a digital mode.
Yeah.
And then ideally someone in this subsidiary shouldn't be seeing the assets of this subsidiary.
Yeah. So you could of course build another private blockchain for that department.
Right.
Or that would take a lot of effort and time. But what you could do is you could encrypt that data, right? Put it on the blockchain, and the encryption keys could be given to the people only who need to access that data. Right? You could definitely build it, but that would be a bit more straightforward, right? You could build an easy UI for them to just, the authentication codes are already with them, they would access it. Other people in the department won't be able to see it because they do not possess the authentication key.
But if I want to see all of the assets of all of the subsidiaries in a centralized place also, would I be able to do that in that way?
It is not impossible, but it would take a lot of it is possible, I would say. Yeah. So let me get this straight. You want two private blockchains or multiple private blockchains within a company, and you want there to be one department that can see everything.
Yeah, like centralized.
Yes, of course it is possible. It is possible to build that, but like I said, it would be inefficient because it's providing the same thing, right? What we want is for only certain people to see certain things, and we want one person to be able to see all things, right? So instead of building a whole network of private blockchains, you could build one private blockchain which gets us the advantage of using blockchain technology for the reasons, and then for each of the components subsidiaries you want to see certain things, you give them that private key. For the people who need to see everything, you have them with the list of all the private keys for the other assets that they want to see. So it's like, it's stored in maybe a web page or password manager or something like that. Because if you do it like that, you're using same algorithms, right? You don't have to spend time and money on developing separate blockchains. Right? Straightforward approach. But if you wanted to do that using multiple public private blockchains, it is possible, just like the local area network. It's multiple local area networks, and administrators can access. Definitely possible. Any other questions? Yeah, yeah, good.
So you said one asset would be represented by one block, right?
No, one asset would be represented by a token. The block will have all the transactional data that goes in.
I'm sorry, I'm not.
Okay, so when blocks are added in, so blocks are, think of transactional data, right? So if I was going to transfer you, for example, let's say $100 worth of Ethereum or a crypto, right? It wouldn't just be on that block, just my 100. It would take in all the transactions that need to go into that, go to people, feed it into that block. That block will have all the data of multiple transactions from different places. The block will just store transactional data, information. That's why.
Right, so that I can keep adding new transactions into the block.
Yes, of course.
Yeah.
Into the it will be different blocks, right? It depends. Once, let's say you send a transfer, right, and it gets added into this block. But if there is more space for more transactions to go, then more transaction data will be added into that block. That's how it will go.
So is there a limit to the number of transactions in a block?
There is. I'm not sure of the number. It's a bit more on the mathematical side, but there are always limits for those things. Yeah. But there are some blockchain technologies that. So, for example, Bitcoin and Ethereum, they have that. It's huge. It takes up a lot of space, right? So there are some blockchain technologies that exist that solve those issues, which we will go through on different assets and tokens and how we store them. All good?
Excuse me.
Question?
Yeah.
Yes.
Now, when we tokenize any kind of asset,
Yes and no. It depends what kind of assets. Can you give me an example?
yeah. Now say for your land,
Yeah.
yeah, can I tokenize it?
Yes, you can. So land, you have the deed, right?
Yeah.
You tokenize the deed and you attach your private key to it.
How do you tokenize it?
So you could tokenize it using an NFT. So NFTs are like digital artifacts.
Okay.
So that's a whole new course, right? You go on to, let's say, a place called OpenSea, or a platform that allows you to build NFTs, right? You would build the NFT there and attach, so you own that NFT. Okay, think of that, you own that NFT. Imagine a digital picture, okay? This digital token picture, you own it. It represents your house deed in the real world.
Okay.
Okay, you mentioned that that's what that is. Okay, and when you are selling your house, you have to transfer that deed, right?
Yeah.
So now, when on the blockchain, authority is given by the private key. That's how you show that you own it, that it belongs to you, right? So when you are giving it to somebody else, the only thing that changes is the ownership of the private key, right? You assign it to that person.
For money.
Yeah, of course. So that is how it is. Pretty much all assets that you can move, that you could sell in real life, you can tokenize it and put it on the blockchain. So you could build systems. For example, let's say you wanted that same system in Sri Lanka, you could build an entire system that does that particular task, where step 1, the user makes a token for their asset. Step 2, they assign their private key. Step 3, the smart contracts that automate all the intermediaries. Step 4, transfers. As they transfer it, smart contracts do the rest. Very efficient.
Which means every token in the blockchain will have a real asset in the real world.
Yes and no.
It has to-
Yes and no. So, see, NFTs and tokens, they can just be minted as well. They don't have to represent a physical entity. Right? It's like digital art. Right? It doesn't represent a physical entity. Right? When you do make these tokens, you have to specify that it represents a real life asset. Because digital tokens can represent so many things. One of its uses is representing real life assets.
How do I know now, say, if I go to the blockchain and buy a token, expecting to realize a real asset, how do I know that they are making a real asset or not?
Yeah, you have to speak with that person who is selling it as well. Like, there has to be a communication. And it depends what you're purchasing, where you're purchasing it, how you're purchasing it as well, right? So you can't, let's say for example, you're here and you're purchasing the token in the US, right? But if the location, the way they are selling it is not a reputable or authentic thing, you shouldn't do that. It's a risk. Make sense? So there is a lot of risk revolving around them, so you got to mitigate them. Number one for this particular thing is by making sure that the person you're dealing with is that person. So if you're buying something, right, you can verify that that person, for example, that they own it by using a digital signature, right? You could do those things. There are multiple ways to verify that something is something, but there are risks, so you have to be okay with that. But when you're building, that's why I said when you're building a system, you build it based on those things that you want. Right? For example, like platforms like OpenSea and all, they do digital art, right? But they do have tokens that represent real world assets. So you have to read the descriptions. They'll have all the descriptions, how to verify, all that stuff.
Have the regulator green light?
Sorry?
Have the regulator in Sri Lanka given the green light?
Oh, absolutely not. No. We will, I don't think, ever see the day where we'll get the regulatory oversight for this anytime soon. Because I just feel like there's so much going on that this is overlooked because we have other serious problems to overcome, right? But let's just say if somebody explained it very efficiently and showed that using blockchain technology to solve issues that we have right now, right, that is more efficient than what we are already having, that would be a huge plus point. Two, because it gives people that trust component, right, we'll be able to get more investors on those projects as well. That's how I feel. Anything else I can clarify?
Any reason the regulator has not given the green light yet?
Because 9 out of, okay, not 9 out of 10, maybe let's go 60-40. When it comes to crypto, 60% of people are going to do things they're not supposed to do with crypto, right? For example, I'll give you an example. Let's say you didn't want to pay tax. Okay, very good example. People do this. Let's say you didn't want to pay tax, employee tax, for example. You would tell all your employees, we're going to pay you in crypto, right? Crypto is unregulated. You don't have to report it on anything, right? Move around on the papers, all that. So there are so many things that people would do that aren't really good things to do with crypto, right? More money would flow out of the country first if they regulated crypto. Already, it's still a bit hard to move money out of the country using crypto, but if they regulated it, still, people would just go nuts, right? I'll show you maybe after this how people did use it to balance inflation, dollar expectations, all those things. So I believe if more people were educated on doing more good with crypto, bringing more projects that actually benefited people, then yes, why wouldn't the government like that? I think they would. That's the thing. Anything else?
Now, what is the relationship between crypto and that tokenization?
It's pretty much it's within that universe, right? So crypto is, think of it, cryptocurrency, right? Cryptographic currencies, right? So digital assets are a broader range. So cryptocurrencies are inside digital assets. Think of digital assets as the universe, right? Countries, people, all that within that universe. Yeah? So cryptocurrency is a part of digital assets. It depends what you're using certain tokens for. So Bitcoin, Ethereum, stable coins, we'll go through all that in the next few slides. I'll get to that point. If I have not covered your question, just ask it again. Yeah? All good? Okay. So physical security and digital security. It's best used when it comes to crypto. It's best used when you put both of them together. Okay. So physical security are the measures such as locks, safes, surveillances to protect our tangible assets. Then you have your digital security, which are the encryption algorithms that we use when we open our phone, biometrics. That's the digital security side, right? But when it comes to crypto, you want to merge both together. Okay. So I'm going to use the example of a hardware wallet. So when you get a hardware wallet first and you set it up, you have something called a seed phrase. Think of it as a recovery key. Okay, it's either 12 or 24 words in the English dictionary in a particular order. You never keep it online. You write it down. Okay, this is your recovery phrase. In case you lose your hardware wallet by any chance, you can get another one. So for example, there is a Ledger hardware wallet, right, made by Ledger. So if you, let's say, lose, so hardware wallet is like this, it's like a pen drive. Okay, so if you lose it, you can get another one, okay, and import your seed phrase onto that. Okay, so that seed phrase is by far the most important thing you will ever have when it comes to wallets. So you have that written down. Your digital security side is done on the device itself, how it's encrypted, all that, right? So when you use, for example, the physical security aspect of this is, you could break down those 24 words into 6666 and store them in different places, right? In a particular order, of course, you have to know that order, right? So that's, you combine physical security and digital security. So far so good? Benefits of multi-signature wallets. Okay, so let's recap on what a multi-signature wallet is. Guys, remember the shared bank account example? Right. So benefit number one, enhanced security. Requires multiple approvals for safer transactions. Normal wallets, hardware wallets, software wallets, one private key. You authorize everything. On that, let's say 3 people, at least 2 people need to authorize the transaction. Okay? Shared ownership enables collective control and reduces individual power. Protection against failure. Guards against single point of compromise. So think, let's say all of us, okay, owned a shared bank account. $100 million. Okay, big amount. And one of us gets compromised somehow, right? Threatened something. That would not matter one bit, because I, okay, cannot by myself move those funds out, right? So I need at least, so what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. From those 13, I need at least 12 people to authenticate that transaction, right? So that improves trust and safeguarding from errors. It mitigates the loss of accidental key loss. So let's say I lost my key, it's fine, you can still move the funds, right? You can add a new key after that. Two-factor authentication and password managers. Okay, tech people are going to like this. Okay, I'm going to ask you a question, and I really hope you could give some imaginative answers. Okay, so generally two-factor authentication is something you know, something you have. Something you know is your password, something you have is your phone, where you get the authentication code. Both are right, you're granted access. But, I know, so password managers, they will store your passwords all encrypted and secure, right? Okay. So the main topic I want to go through this is how we would break two-factor authentication and how we would break a crypto wallet. For example, how would we hack a crypto wallet? Can anybody tell me how you would go about on breaking two-factor authentication? Any example at all? Okay. Problem? Let's go step by step. First thing is the password, right? We would want the password before we go for authentication codes. We're not going to even go to the authentication code if we don't know the password, right? So how would we break the password from somebody? Let's say I want to get somebody's password. First thing, keyloggers, right? If somehow, okay, for those who don't know what a keylogger is, it's a piece of software or a hardware that can be injected and will capture all your keystrokes, right? For example, you leave this keyboard lying around, you could put a small pen drive or something very, very small and install a keylogger here. So everything that's typed on this will get transmitted. Will get transmitted to the attacker. Okay, so for example, spend the whole day, you go. So everyone here knows Binance? Okay, good. Everyone knows Binance, right? Okay, good. So let's say you log into Binance and you put your password, right? So the whole text file will have all your keystrokes, right? And then in the day, the attacker may get it, we will get it, okay? And then he just goes through the text file, sees all the websites, and sees if the password has been entered. That's number one. Two, the same password is used on different websites. Now, yes, when you do enter a password onto a website, when you sign up and you enter the password, it's encrypted and stored in an encrypted form on the website. Correct. So every time you do log in and you type your password, then they don't check the plain text password with the plain text password. They re-encrypt that password and check if the encryptions match, right? This way, even if the password list is leaked, you can't hack it easily. Remember, note, I didn't say it's impossible. I said hack it easily. Okay? Quantum computers are coming. Once that's there, we'll have to find various new ways to manage our passwords because it's possible to crack these hashes. Okay? So let's just say by chance, okay, you have a password on a site that has no encryption stored in plain text. Attack against the password. Second way, insecure networks. Have you ever, okay, insecure networks and VPNs, okay? If you have, for example, we go out, we want to log into our banking app, okay? I'm not talking about authentication, I'm talking about entering your password, okay? On a public network. You do that, it is not impossible, it's definitely possible, to sniff data packets on a public network, okay? You could sniff those packets and find the password in them. It is possible. And there are different various network attacks that can happen. If you use a VPN that is not a really good VPN, okay, what we call is a honeypot, okay? So think of me, this is the VPN, this is the site you want to access, right? This guy is the honeypot. My data goes through here and here. This guy can see everything, right? So if you send your password and it's not in an encrypted channel from here to here, this guy's going to see it. Make sense? Right? So there's multitude of ways of getting someone's password. Second thing is, how do you get the authentication code from your victim? I'm going to jump to screen grabbers after malicious apps, okay? So somehow somebody gets a malicious app on your phone. You might think, oh, that's not possible. That's just no way. Who secured my device? It is possible if somebody wanted to. Okay, it is being done over and over again. If a 12-year-old guy in a basement can hack the NSA, pretty sure if somebody wanted to put a piece of software on your phone, they could do it. Okay? So the malicious app would work in a way where it can identify authentication code SMSs, right? Now you could, let's just say, as that is identified, there are multitudes of things you can do. You can straight away send it to the attacker, you can hide the notification, you can send it and then delete that message, right? If your phone is not with you, if it's somewhere there, 5 seconds, SMS comes, it sends it to the attacker, deletes the SMS. Not impossible, right? Two-factor authentication gone out the window. Okay? Next, you might think, oh, there's no way to hack wallets, right? Crypto wallets. What if, now let's go back to when I told you about when you set up the wallet, you have your 24 or 12 seed phrase. Remember that, right? If beforehand somebody had installed a malicious piece of software, it's called a screen grabber. Let's just say this piece of software takes screenshots of your device every second. Okay, every second. Not every minute, every second. And at the end of the day, send it over to the attacker when your phone is connected to the internet. Okay? So when you set up your key, your wallet, your 12 and 24 words come on your screen. Screenshot goes to the attacker, right? Attacker now clones your entire wallet. They have all your assets. goodbye hardware wallet, software wallet. So, since now you all know that it is not impossible to break all these things, okay, it is very, very possible. Over time, however secure you think something is, if you spend enough time and resources, you're going to break it. You're going to get through, right? So we can't definitely stop it, but we can reduce the risk. First of all, when you're doing financial stuff, let's say crypto related, keep a dedicated device, a phone or a laptop that only has Google Chrome and only the necessary software that you need for that. You need to know exactly what processes are running on that computer at any given time. That's the first thing, right? If you have a phone and you're using, say, banking apps, Binance, whatever, you don't know if something's running in the background. You're going to go to Task Manager, you're going to search through all the 100 processes, saying, no, this is the one that's hacking. It's never going to happen. So keep a dedicated device for these things. Second, a dedicated network. Only use that dedicated network because it's your home network or your office network that you know through and through, right? So those are the best ways you can prevent yourself from this. Any questions? Good. Next, market capitalization and crypto asset exchanges. Understanding market capitalization of crypto assets. So, crypto market capitalization is calculated by multiplying the current crypto price by the circulating supply. Okay, so just like stocks, current price multiplied by the outstanding shares, circulating supply here. This metric provides insights into the size and relative value of different cryptocurrencies in the market. Understanding this is crucial for assessing overall market trends and comparing different cryptocurrencies. So just like in stocks, when we have high market cap assets, right, we call them blue chip companies, right? Same thing in crypto, okay? So top is Bitcoin that has the most amount of dominance in the crypto market, followed by Ethereum, USDT. I will go through what USDT, USDC is. BNB is the token for Binance, right? It powers for transactions and all that. You use the BNB token. So higher the market cap indicates a larger user base, increased liquidity, and potential greater stability. So think of high market cap tokens on crypto are like blue chip companies. Okay, that's all I want you to understand on this for now. Next, the other thing you can do is use market capitalization, just like with stocks in crypto, to judge people's sentiment and technical analysis. For example, right now on this chart, we're near the 1 trillion level, right? So if in general crypto is expected to in the next run go to about 10 trillion market cap. That's the expectations. Okay. So right now at 1 trillion, if we see the chart dipping below 1 trillion, we can assume, it's not a guarantee by the way, we can assume market sentiment by saying, okay, we are under 1 trillion, people might be a little hesitant to buy, or they might just want to sell off expecting lower prices and sell off. But if we are under 1 trillion and we hit 1 trillion, we can expect a small jump at least, because people are going to get hyped, right? So different ways of using market capitalization. Overview of crypto asset exchanges. Okay, how confident are you all about the knowledge on crypto asset exchanges like Binance, Coinbase and stuff like that? Do you all have like a really good understanding? Do you like know about it? Okay, good. I will give you an example. Okay, think about a casino. Okay, you go to a casino and you give your real money, fiat money, and you get casino chips. Correct? Same thing with the exchange. You go to the exchange, you give your real money and get crypto. Okay? Then in the casino you play games, you may lose some, win some, you anyways have the end of your tokens, your chips. Same thing in crypto now. You invest, lose some, make some, you have now your crypto. Right? So now you can't take those casino chips, for example, go to Keels and buy groceries, right? It's not possible. You need to convert it back into rupees. So you go back to the casino and give you chips, you get back rupees. Same thing on the exchange, you give the exchange back your crypto, they will do bank transfers with real money to your account. It's number one way of getting your money out of the exchange. Second thing is, you're in the casino, someone next to you wants chips, and they can buy those chips off you in the casino, right? You just give them the chips and they do a bank transfer, right? Make sense? Same thing on crypto, it's called a peer. Yeah.
If you want to take money abroad,
Yeah.
I have no money in Sri Lanka. I
Yeah.
convert it to crypto. I go to another country.
Yeah.
Then I can sell it on the exchange and get the money of that country.
Yes and no. Yes and no. Okay. So it depends like this. Let's say, so how we would do exactly that. I'll tell you exactly how we would do that, right? So let's say Sri Lanka and Indonesia, or Sri Lanka and Australia. Okay, let's say Sri Lanka and Australia. What we do is go on the peer-to-peer. Okay. So when you sell, so I'll just quickly finish this example and then get back to that question. Okay. So as I was saying on the casino, you can sell your chips to a person and they do a bank transfer, right? On crypto exchanges, as a peer-to-peer network, where on Binance you will be met with another person and you can sell him the crypto and he will do a bank transfer to your account. Those are the two ways that you get money out. Now to your question. Okay, so let's say we have the money in our Sri Lankan bank account. Okay, I'm not going to condemn that people do this, but this is how you do it. Okay, you would go on the P2P market, find a seller for a stable coin, let's say USD. Okay, so that slide is next, but I'll just break it down here. So USDT is something called a stable coin. What it does is it pegs, so one USDT is equal to $1 US. Okay, when you print USDT, okay, it needs to have a reserve that backs it up. So for example, if there are $100 million worth of USDT in circulation, there has to be $100 million worth of assets in reserve to back it up as well. Okay, so what you would do is you would convert those rupees into USDT, okay, and then you would need a bank account in, let's say, Australia. Now the place where it gets tricky here is when you're entering your bank account details on the exchange, for example on Binance, that other bank account has to be in your name as well. It cannot be in somebody else's name. Even if it is not impossible, it's possible, but this is the easiest way to do it, right? So let's say you have two bank accounts, Sri Lanka, Australia. Okay, you will convert on the P2P market in Sri Lanka and get your USDT stable coin. Now you have US dollars, think of it. Okay, then you go onto the P2P market again and you find Australian sellers. Very easy, there's tons. Okay, and you will sell them the USDT and they will do a bank transfer of Australian dollars into the bank account in your name in Australia. All that you could do probably in under 30 minutes. Very, very easy, right? Any questions on that, banking professionals? Anything you would like me to clarify on?
So when I transfer my ACAP to USDT,
Yeah.
how easy it is? Because if it is very much easy, so everybody will do that, right?
Yes, definitely possible. Now a lot of people are doing it. A lot of people are doing it. Right? How do people send? For example, when I was in uni, some people found it hard to send their money out of the country for uni expenses. Right? For example, I'll give you a very good example in Malaysia. Right? So Malaysia banned Binance, for example. Right? So people had to send money. Banks were not doing it. Money exchange was charging an insane amount, right? So what people did was they had friends in other countries who were in Malaysia, right? So what we do is we would transfer again crypto to those people. Those guys would liquidate it in another country and they do a direct bank transfer from their country to Malaysia, to those units. So in terms of getting money out of the country, money into the country, all that stuff, it's quite easy if you know how to do it. Crypto can definitely do it. Yes.
So you said that your USDT has to be backed by a reserve, right?
Yes, yes,
So
yes.
in my case, what is the reserve? What is going to be the
Okay, so
reserve?
because it's unregulated in Sri Lanka, you don't have access to go to the USDT treasury and give your USDT and get physical dollars back, right? So since you're in Sri Lanka, okay, most countries, right, nobody really actually goes and gives it to the treasury, USDT treasury, and says, you know what, I want dollars. It's not how it works. You just need to be backed up by that, so that the SEC and regulations don't get too much messed up in it. Okay, so your question again, right? When you're converting it, and I
So
did.
I have 100,000 rupees.
Yeah.
I want to see it like.
Yeah, like what I said.
Yeah. I want to convert this to USDT.
Yeah.
I can just go into exchange and just convert without having the reserve, right?
No, you don't need the reserve. You just have to have the rupees, of course.
I have the rupees.
Okay, that's fine. So what happens is you're not, because again in Sri Lanka it's unregulated. You cannot directly deal with the exchange itself. What you deal with is other people on the exchange that are selling and buying USDT and other coins. Right? You don't deal with the exchange directly. So you get paired up with a person and he will give you a rate. Now yes, I did say $1 is equal to one physical dollar, right? But on the P2P market, depends on demand and supply as well, people will jack up the price. So for example, let's say the rate right now in Sri Lanka for the US dollar, let's say it's 300, on crypto it's going to be 310, 312 or something like that, right? So when you do exchange it, you will have that USDT. In terms of liquidating it back, yes, you need that exchange has to be there. People have to be there because it's unregulated in Sri Lanka. Now in Australia, if you did the same thing, you could give the exchange back your USDT or your AUD token, and the exchange will do a bank transfer into your account. So the unregularity, because it's unregulated here, it brings these things, but it doesn't mean there aren't loopholes that people exploit. That's what I'm doing with this presentation, is showing you all, not only telling you all, oh, okay, these are all the legal aspects of it, this is why it's good. I'm trying to explain to you all that most things you all think are all possible with blockchain technology and crypto. Whatever you want to do, however unrealistic or imaginative is, if you spend enough time, you'll realize that it is possible to do. Two-factor authentication. I mean, most people think it's unhackable. Showed you how you can do it right today, right? Targeted attacks, how to hack wallets, right? Things thought that are impossible, you could do. Yeah. Anything else?
Now, what I understand
Yeah.
regarding the transaction, you are sending money overseas.
Yeah.
Now, you are buying crypto from a local person, right?
Correct, yes.
Supporting Sri Lanka.
Yes, correct.
They pay should be in rupees,
Yes, correct.
not in dollars.
No.
Yeah.
No,
So
correct.
you go back, you go to Australia,
Yeah.
and you send those crypto in their currency.
Yes, correct. And then they deposit AUD into your AUD bank account. Correct. Anything else?
My question was also like, this again clarify, all USD has to be backed by asset.
USDT needs to be backed by assets, like real world assets, because otherwise
Who regulates that?
the SEC in the US, the Securities Exchange Commission, overlooks this. They get involved. That we have a slide on that, and I will go through that with you. So they regulate a lot. I mean, they are a little hypocritical as well, but all things people are, right? So they kind of overlook it. There have been so many cases with USDT. So thing is, USDT isn't the only stable coin that exists. You have the Binance's stable coin, which is BUSD. You have a USDC, which is made by a company called Circle that has government ties, stuff like that. Okay, all good? Yeah.
So all of them are regulated by SEC, is it irrespective? Or
It's-
is it only USDT?
No, all of them, all tokens are looked over, most tokens I would say, are looked over by the SEC, right? So for example, if they deem something is not right, they will get involved and try lawsuits and see, because they want to protect the investors as a priority.
So
Yeah, because it's generally regulated. These major exchanges are regulated in different countries, right? So the US plays a huge role in it, right? Even if when the US sits with, let's say, the Nasdaq or the S&P 500 goes down, some are correlated. Some tokens are correlated to that, and it goes down. So US, the SEC plays a huge role, but all countries where the exchanges exist, they do govern it. All good?
Exchange must be taking a commission to transact.
On the P2P, no. On the P2P, no. But all other transfers and products they offer, they do take a fee. Yeah, I think it was. Sorry.
Other countries where you have it's regulated and you have an exchange.
So you have the US, you have Australia, you have London. You have a few good countries. I mean, I don't have all the names in my head, but
They are all accepted crypto as a medium of transaction.
not a medium of transaction, but an investment asset as well. Like you can't most places, I would say, you can't go to a shop and say, you know what, I'm going to pay in USDT. And you can't. It's not going to happen. Like, see, in Indonesia, crypto is allowed by the government, but it doesn't mean that it's allowed as a payment for services. Very big difference on using it as a payment for services and being able to invest it. Yeah?
So is there anywhere where you can actually use it as a payment, or is it just mostly for investment?
You can use it as a payment. I think here in Sri Lanka there's like a Bitcoin a cart somewhere that sells food for Bitcoin. So like it's unregulated, of course, but there are places like that. Like El Salvador, they use Bitcoin as a currency of payment there. So there are some places that do that.
Here in Sri Lanka, they are already engaged in the trade, like Bitcoin trading.
Yeah.
How does it happen? We don't have access to an exchange. Is it peer-to-peer?
Okay, I do have a slide on that. I'm not going to ruin the fun, so I will get to that,
Yeah.
and then I'll show you everything. Yeah. Okay. So that's pretty much what exchanges are, right? They provide marketplace where buyers and sellers can interact, place orders, exchange digital assets. These exchanges offer various features such as order types, trading pairs, and liquidity options to accommodate different trading strategies and preferences. So, when, like you said about trading, right? When you want to trade, you would use an exchange to do those trading, right? Now there are different types of trading also. So I'm not gonna go in detail because it will take too much time. So you have your normal traders which use like technical analysis, where they offer the charts, the tools, indicators that you can use. Okay. 2, algorithmic and high frequency trading. These are mostly done by institutions. Okay. So they will have an API that links into Binance, and they can execute their orders based on their algorithms and coding, right? So that is offered by exchanges. 2, option contracts, futures contracts, different trading styles, and it also offers the ability to stake your crypto. Staking means it's like putting your money in fixed deposits. It's the same thing, but on crypto. So you have Binance, Bitcoin staking, Ethereum, like different investment products that are like fixed deposits on exchanges. Okay. Next, using block explorers to verify transactions. This is probably the second coolest part of this presentation. So, block explorers are online tools that provide a window into the blockchain. Remember, public blockchain, right? They allow users to search and explore transaction histories with details such as transaction confirmations, sender, recipient addresses, transaction amounts. So they help transparency and enable users to verify the transactions. So, let's say I transferred some Ethereum to you, okay, some kind of crypto, Bitcoin or Ethereum. I transferred it to you. So, I'm pretty sure you all have heard that if somebody says, oh, we transfer through Bitcoin and it's untraceable, it's very, very secure, no one's going to find out, right? That is completely wrong. Okay, I just want you to know that is completely wrong. If somebody wanted to see exactly what you're doing, it's very easy. I'm going to show you now. Okay, so let's say now I transferred some money to you, okay, some Bitcoin. There comes a transaction ID. Okay, if you take that transaction ID and put it onto a block explorer, such as the one on blockchain.com, you're going to see everything about that transaction. Who it is, to who, where it went, how much, everything you need. Now remember, no, they don't have the names of these people, they have their private key, public keys, which is like the account number. Okay? Then, now, so as you can see on this, you have all the information on that transaction, so amount, fees, everything. So, let's just say we sent that transaction, okay? Somebody here, say you, intercepted that transaction ID, okay? That's all you have. You don't know who it went to, what it went, nothing. You just know the transaction ID. You can put the transaction ID here, and you know everything between that transfer between me and him, okay? Now let's say you want to go a little deeper and see what do we have in our wallets. Sounds impossible, right? If you put the public address of somebody into here, you're going to get every bit of information on that wallet. For example, how much Ethereum, this is Ethereum address by the way, it's a public blockchain so it's possible. So for example, this Ethereum address, how much Ethereum has gone through it, okay, gone out of it, how much is available on it, okay, and then coolest part is every token, Ethereum based token is listed from that wallet in here. Okay, so the use of this, yeah, of course, if government officials and cybersecurity people want to track your transactions, it's a piece of cake. It's a piece of cake. It's not going to be that hard at all. So you might think, okay, how do we find out who this thing belongs to, right? For example, let's say one of these transactions I sent to you or you sent to me through an exchange rather than wallet to wallet. Okay. Now, if it's a government authority, they go to the exchange. They say we have this from a court order to reveal who the user is for this public key. They are going to do it. They are going to do it, and they're going to know exactly who it went to either or who it came from. So it's not as secure as you think it is. But yes, of course, there are secure things that people use, such as a token called Monero, which has privacy enabling features in it. Another way we would send Ethereum transactions that you don't want people to see is something called mixing, right? So you mix in all the transactions that are supposed to go out, so there is no way of tracing which person sent to who, right? It's much more in-depth and complicated, but that's another way of how people can stay anonymous, right? But these are very technical things as well, so not everyone is going to be able to do it, okay? Next are the importance of price indexes in crypto markets. We'll get to your training question in this section, okay? So what price indexes are, price indexes serve as a benchmark for tracking the value of crypto assets. They aggregate the data from multiple exchanges to provide a representative value for a particular asset or the overall market. So you can use price indexes to analyze price movements and make informed decisions and assess trends. Okay, so for example, this is the Bitcoin chart. In terms of trading, okay, what we would do is we would first convert our rupees into US. Now we have access to Binance, right? You can sign up today right now, set up your account, but you can't purchase your crypto using a bank transfer or credit card. That's the only thing. Getting money onto the exchange, you do it through the peer-to-peer. Yeah, so far so good? Brilliant. Now you have your USDT, right? So you need, you can buy Bitcoin with different pairs, but mostly you do it through USDT, okay? So buy your Bitcoin and you can use the price indexes to perform your technical analysis, investor sentiment, all that. For example, you draw support, resistance lines. This is actually pretty much the chart we have right now, okay? So as an example, if we break below 25,155 and close it, then we look at 22,000. So you can do technical analysis using price indexes, okay? The other thing, rare but not impossible, okay? is arbitrary opportunities. Does anybody know what an arbitrary opportunity is? Okay, so an arbitrary opportunity is, let's just say, I'll give you a real world example. You have money changers, right? So let's say you go to one money exchanger and they say $1 is 300 rupees. You go to another money exchanger and they say, same day, $1 is 350 rupees. You see where I'm going with this. That price difference where you can buy in from one and sell to the other gives you an arbitrary profit from just that. So I know theoretically, I've been in this for some time and I've never actually seen an arbitrary opportunity or taken part in one in my time here. But we did, and we helped people make a lot of money. So how this happened was, Binance Australia was stopping AUD withdrawals and deposits. Because of that, there was a change in the AUD to USD value. Okay, so we used two exchanges. One was called SwiftX, and the other one was Binance. So on Binance, $1 was going at 0.7 AUD, and on SwiftX, $1 was going at 0.6. So what we did first was we converted 1,000 Australian dollars to US dollars on Binance, and we got 780.1 US dollars. We sent that to SwiftX. Okay. Now, in terms of sending crypto, there are different networks that you can use to send the crypto. Okay, and the network charges are maybe like the range depends what network. So for Ethereum, it might be like $6. For the Polygon network, it was like I think $1, right? So we sent this for $1 to SwiftX. Okay. Once we did that, we converted on SwiftX from the to AUD. So our 780 USD became 1,200 AUD. All this we did in 5 minutes. Yep, 5 minutes. 20% profit, 5 minutes. 20% profit minus $1. Right? So these are the advantages of having price indexes. Is now this was lucky. This was very lucky, I have to admit, right? It was very lucky because we pinned this because of the news. But what institutions would do was they would have algorithms running on all exchanges to identify arbitrage opportunities, but they would have servers running on the same region as the exchange servers, so that they can execute those trades like this. Yeah. So price indexes help you do technical analysis, arbitrage opportunities, high frequency trading as well. Next, tokens, ICOs, STOs, and IEOs, and regulatory considerations. So let's see the benefits and challenges of tokens. Start off with liquidity. Tokens enable easy transferability and tradability of digital assets, enhancing liquidity in various use cases. So for example, when we spoke about how easy it is to transfer assets, physical assets made into digital assets and transferring the private keys. Okay. So, programmability. So tokens offer programmability. For example, when I said about the smart contracts, putting that into this and merging them, programmability. Okay. And the user incentives. Tokens can incentivize user participation and engagement within specific networks or ecosystems. There are a few challenges which are like regulatory uncertainties. Like I said, different regions, different legal frameworks, a lot of hoops to jump through. Most of them do, some don't, and then they get sued, price of those assets come down. So over time, the SEC and other regulatory bodies, they do intervene, and that is a huge impact on crypto as well. So when you're pushing out a token, you need to understand where your region that you're pushing to, so that you don't break any of those regulatory standards. Right? Market volatility. Token prices can experience significant fluctuations due to various factors, making market volatility a change that needs to be managed effectively. Okay. Now I'm going to go through 4 types of tokens, okay, and why we invest in them. Okay, so Bitcoin. Now, pretty sure you all either have invested or wanted to or know about investing in gold, right? You invest in gold because it's a store of wealth, right? We believe over time it will go up in price. Yeah, scarcity of it as well impacts the price. If there was gold to buy at Keels, okay, or Food City, that's not going to be valuable at all, right? The scarcity also gives value. So Bitcoin has a limited supply, which is 21 million Bitcoins. There are 19 million something right now. Okay, so people invest in Bitcoin as a store of wealth. Okay. Second, we have Ethereum. Think of Ethereum as, so Ethereum is a utility token. Think of it as it provides a utility. Okay, you do things with it. Okay, so think of when we are building a house, we have the foundation, right? We have concrete. If we don't put the concrete, you can't build anything on top of it. Yeah, make sense? Some of the logic makes sense there. Okay, so same thing with Ethereum. Okay, everything is built on top of that Ethereum network. Okay, you have apps, smart contracts, other projects, cross-chain stuff. All that is built on the Ethereum network, and they use the Ethereum token to move for transfers and fees and stuff like that. So that's a utility token. Next, we have our stable coins, which I went through. They are pegged. Also, it's not just currencies. You have stable tokens that are pegged to assets like gold and stuff like that as well. So we went through that. And how many of you heard of Pepe coin? If one hand goes up today, I'll be really happy. Just one. If anyone heard about Pepe coin? Okay. Okay. So these are meme tokens. Okay. Dogecoin. Anyone heard of Dogecoin? Yeah. Okay. Not bad. Okay. Good. So these are meme coins, right? They are made as entertainment, hype, and stuff like that. The chances of you getting rich on a meme coin is if you jump out of this building, you would fly. Those chances are higher than you becoming a millionaire by investing in a meme coin. Okay, but it's not impossible. Okay, but you can. So if you do invest in a meme coin, don't expect that money back. Okay, so those coins are made just purely for hype and entertainment, and people buy it because of that, and the price goes up and then immediately drops. Everyone loses their money. Okay. Next, understanding ICOs. Okay. So there are 4 steps on how a coin comes out onto the market. Okay. First, there is something called a project development and white paper. This is, let's say, a PDF that documents everything about the project. Who is doing it, the team, what they are trying to solve, how they are trying to solve it, where they see this project going. Everything is in the white paper that comes out first. Then comes out a pre-sale and marketing, right? They use all the marketing they can to push the white paper and the idea out to everybody, and they will have an initial a pre-sale. So select amount of tokens sold to people. Now if you have read the white paper and you love the project, okay, we'll go through the considerations later, okay, and you want to invest in it, your pros here are if the asset does go up in value, you have bought it at a lower price than what it entered the market. Okay, so that's what happens in the pre-sale and marketing. Next is the public token sale. So now I spoke about tokens on exchanges, right? So you can buy tokens or invest in tokens using other methods as well. Okay, so which are like decentralized exchanges that house these kind of tokens before they go on centralized exchanges. So that gives people the ability to now participate and buy those tokens. Finally, after they will use the money from the pre-sale and the public token sale to be able to finally get their token on an exchange. Okay, once they do this, easy liquidity, enough and more money to come through, right? But it's a very hard thing to get on like Binance or Coinbase or something like that, right? It's very hard. Most will make it to public token sales, but only the really good ones will make it to an exchange. So considerations, right? Before you invest in a project, you've got to go through the white paper thoroughly. You need to understand what they are trying to solve. Okay, just like how I spoke about creating the blockchain technology in Sri Lanka. Are these when you're looking at the white paper, are they trying to create a project where the solution already exists, number one? If that solution is more efficient on what we have right now, and they are still trying to put a crypto project on it, doesn't make sense, right? It is very hard to get people to join something, okay, when they are so used to it already being there, okay? If it's going to give you a ton of money, yeah, people will join. But if at any point it's either the same amount of efficiency and easiness for the user, or anything even remotely less, then I'm going to join. Doesn't matter how good the technology is, right? So you want to read that white paper and understand it thoroughly and feel why you are investing in this, okay? And then understanding the regulatory landscapes and compliance requirements is also crucial. It's important to evaluate the project's viability, token economics, and long-term prospects. Like I said, go through it, see what they're doing, why they're doing it, and does it make sense. Next, security token offerings and initial exchange offerings. So, security token offerings, they issue tokens representing ownership in assets, ensuring legal compliance and investor protection. So, the main thing I would say is there is a lot of regulatory oversight on security tokens. So if you are investing between ICOs and security tokens, the chances of your security token, going bust or just being taken off is less than an ICO. So think of it as more protection on the security token offerings than ICOs. Any one of us can start an ICO right now. Right? Any one of us within maybe a day or two can develop it and push a token out. No regulatory oversight. So security token offerings give that. Initial exchange offerings are another massive thing, which are token sales that go on exchanges. So for example, when you open Binance or one of those exchanges, you will see on their interface them saying, okay, we have a new token coming out. It's the same, the white paper is there, the initial token sales, all that, but on an exchange. The benefit of these are they provide investor protection, credibility, liquidity, and a wider investor base, right? Those are the key things that you need to just understand. Don't worry, these slides I will help you all for you all to be able to get them, right? Because I understand that this is a very dense subject, and I don't expect any of you all to be able to remember anything more than 50% of this. And it's a very dense topic. I understand it. You are coming either after work, tired, all that, right? Trust me, I understand it. I'm just trying to be able to make a dent in your mind so that when you go through the slides, you remember, oh, okay, this is what it is, right? Next and finally is the SEC. The overview of the SEC, which I said earlier, is a regulatory body that oversees the securities markets and protects investors. So they look after what the project is doing, whether it's going to be, a fake out, so something called a rug pull, okay, where anyone can make a token, put it. Once the price goes up by a lot, the creators can just take all that money away. Using smart contracts, they can build in so that you cannot cash out. Okay, I need you to understand that, right? No matter, like for example, this Pepe token, right? Pepe token. When it went up, some users could not cash out. Okay, so that's built into that token. So you have to. There's so many things that go on that you have to look through. So the SEC plays a big role in trying to regulate those things and help investors. Okay, regulatory considerations are paramount in the crypto market, especially with regard to the ICOs, STOs, and IEOs. So understanding what their regulatory rules and regulations are, you have to, if you're pushing out a token, you need to understand all of that and not break any of them. Because if you do, the lawsuits are extremely long and costly, right? Finally, I will talk about the crypto course we offer. Okay, so in case you want to start your journey in crypto, you want to learn step by step how do we navigate this market. Okay, you can start with, we have a brief introduction, how do you register yourself and verify yourself on Binance using the Binance interface. How do you purchase the USDT, which that was the most time I spent on answering that question. Okay. Technical analysis, which I showed on the charts, how to draw those things, see how where the market is about to move, probabilities, that stuff. Spot trading, how do you actually buy the crypto, sell the crypto, how to exchange your USDT or crypto for cash in Sri Lanka to get back your rupees. Deposit and withdrawal from Binance exchange to anywhere. Your question about Australia. How to purchase, set up and use your hardware wallet. We went through what that was, why that is. So here you will know exactly how to set it up, how to secure your keys, seed phrases, everything. Integrating cryptocurrency into your business to send and receive payments. So for example, if you have shops and stuff like that, how can you use crypto and get your payments, right? Since it's unregulated, it's a bit of a gray area. So when you're doing it, if you do start to do it, please do call me and talk to me, and we'll navigate that. Okay. How to earn passive income, which I said about staking, like fixed deposits in banks, the crypto version. Our portfolio, which will be updated soon. How crypto can save you from inflation. So how we did this was we did our analysis and we saw what's happening with the rupee to the US dollar rate. Yeah. So if you wanted to hedge your risk against inflation, sure, you can buy gold, but if you know US dollar is going to exchange, you buy US dollars and keep it, right? But you can't buy US dollars. Banks are not going to give you money exchanges here and there. Okay. So what you do is you go to Binance, buy your USDT, transfer it into your wallet. Same thing. Sure, that rate is a little bit more, but that overall percentage is going to be the same, right? That's one way of saving yourself from inflation. And introduction to futures. So this is like leverage trading. That's our course. If you would like to enroll in it, you can meet me after the session. We'll help you through that. And finally, for once you all are done with the course, spend a little bit more time understanding how to trade crypto and all that. We built a trading algorithm too, actually. So we built two trading algorithms that give you points of entry, buy and sell, for Ethereum specifically. We haven't spent time on other assets. So for Ethereum specifically. So one of our algorithms made 143% profit. This was running it from January 1st, 2022. The second algorithm made 604% profit, same time period. So these are also available for sale, but these are probably going to be when you all have mastered it, or you all want to use algorithms in your firm for introducing crypto as a product to your customers. That is pretty much our session for today. Question? Okay, good. So I hope everybody, yeah. Yeah. The thing is, the hedge against inflation was the stable coin. So stable coin won't change value, right? Because one USDT is equal to one US dollar, right? To invest in Bitcoin, yeah, price fluctuation. But I specifically said like USDT is a stable coin, not other crypto. I mean, yeah, you could invest in crypto and it definitely is a hedge, but not on the terms of having the dollar access. That is the answer to that. Anybody has any other questions? Anything you didn't understand that much? I know it's an extremely dense topic, but I have the slides. If you all have anything, you all can contact me. If you all purchase the course, you will always, of course, have access to me. If you all need anything in the future to talk about, to be able to bring it to your companies, banks, whatever, right? Because if you go back to where you work, right, banks, asset managers, IT companies, I want you to pitch ideas to your higher ups on using blockchain technology. However, please do make sure that the idea you're pitching is more efficient than the current thing, or it's not going to work. Yeah, it needs to be, number one, more efficient than what exists. It needs to be more user friendly than what exists. And 3, it needs to, when it's introduced, show clients that they have complete control over what they are investing in, all that information, and is transparent and secure. So please, when you have the time, go through the slides, see what what exists in your company, how you can include blockchain technology or crypto into your industry. Pitch the idea, right? Pitch the idea. You have nothing to lose. You implement it by chance. What are the chances, right? You implement it, people love it. If you're heading that division, you make a ton of money. Okay? Off chance, they say, you know what, we're not going to approve this. That doesn't mean it's over. Right? I showed you the tools that you can use to build the private blockchains, right? Learning these things are now very easy with all the AI tools available. Okay? Executing ideas have become extremely easy with the technology we have. However, it's the imagination part of it that is lacking. So if you have imaginative ideas, okay, ideas on how you can make something better, you don't need to know how to build it. That you can find out, right? So please take time, understand it, and make it happen. Any other questions? Okay, lovely. Thank you so much for today. Hope you guys understood at least a little bit, enjoyed the session, and hopefully I hear from some of you, at least, or all of you soon. Thank you. Well, also I'll give you my business card to each of you all, so that if you all do need to get in contact with me, thank you. Take care. Keep in touch.